welcome. You have tuned into Market Fatafat on ET now. I'm Shrishti Sharma. With me is Shail D'Souza. And viewers, this is the show where in the next 1 hour, you should get ready to know all the buzzing counters as of now. But before that, let's have a look at what the markets are up to. The Cheryl, a slight bit of recovery from the day's lowest point as of now is what we are seeing on the benchmark indices, but still down about more than 1% for Bank Nifty at least.
Absolutely, Shrishti, good afternoon to you. And yes, the markets in fact tried to make a recovery, but that also got sold into right now. If you see, we are hovering near the day's lowest point when we talk of the benchmark indices. Ditto coming in for Nifty Bank, which has seen a decline in excess of about 680 points from the day's low highest point. Also, you have the broader markets where the pain is actually sharp in today's trading session. Both the mid-cap as well as the small-cap index right now are actually fallen in excess of about 2% or so. A lot of stocks are in focus on back of the earnings, but one pack that I would like to highlight is the FMCG pack. That's the one that's bucking the overall market weakness. If you look at the FMCG index, it is the top sectoral gainer in trade today. And if you look at the stocks on the Nifty also, most of them are from the FMCG pack, be it HUL, ITC, or for the matter of fact, Britannia. All of them seeing very good steady gains in today's trading session. Add to the list as well as Nestle also is seeing a very good day in trade today. So that's the way how the markets are looking like at this point in time, Shrishti. No doubt we have a lot of individual stocks that are in focus on back of their earnings, and we will take our viewers through all of those stocks in the course of the next 1 hour.
All right, yes, let's get ready for that. And but before that, let me welcome our team of researchers as well as our technical expert for today, Osho Krishan, who is a senior analyst of technical and derivative research at Angel One, is joining us on the technical side, as well as Snehi and Ankita are joining us on the research side. So one by one, we will take you through all the buzzing counters as of now. Cheryl, since we were just talking about the kind of recovery that we are seeing, a slight bit of a recovery is what we are seeing as of now as well, because for Bank Nifty is just 500 points of cut. Right. So almost more than 100 points recovery from the day's
approximately
lowest point.
200 points of recovery actually from actual day's lowest point coming in for Nifty Bank. But yes, but now the stock is actually, or rather the index is also seeing subdued moves. We still have 2 hours of trading session left, so once that is done, we will know where we are at this point in time. But let's talk about the stocks that are in focus. One of the stocks definitely has to be Happiest Minds, because they reported their earnings, and we are joined by the management of Happiest Mind to talk about the earnings. We're joined by Mr. Narayanan, who is the MD and CFO of the company, while we have Joseph Anantharaju, who is the Executive Vice Chairman of the company, joining us. A very good morning to, or rather, good afternoon to both of you gentlemen. Thank you so much for joining us on ET Now to highlight the earnings for the quarter gone by for your company primarily. But let's dwell in more about your earnings. And if you look at the company, it actually delivered 11% constant currency growth in FY24. If you could tell us what sort of a target are you actually envisaging for FY25, given the fact that there has been acquisition and also there is acquisition scale up as well. So what are you envisaging?
Coming to the next year, we have announced a couple of acquisitions. We continue to be on the lookout for more. We have a reasonably good pipeline as we speak. But the 2 acquisitions that we have will have a reasonable impact, and we have also planned for a decent organic growth. And as in the past years, we're not splitting our outlook for the future basis organic and organic. And here, it's early days to give a guidance, because we have just about closed the acquisitions that we are talking about. One is still to close, which is Pure Software, which we are expecting end of May. But given all of those moving parts, we believe that we can do this as an estimate, a growth of about 35 to 40% for the next year. So that's the starting point on revenues. And on margins, I would like to go slightly broader, which is 20 to 24%. And I would like to now bring in operating margin EBITDA interchangeably, because quite a bit of our money will get deployed into the acquisitions. That has to work. And when you take EBITDA, it has other income and the other components. So we'll have to balance that through the acquisitions that we get. But one thing I would like to clarify, Pure Software or Macmillan Learning, both acquisitions are cash accretive, growth accretive, synergistic, and they are very profitable companies. So we have not gone ahead and we are not doing something where we need to turn around the company and the such.
Right, Venkat. In fact, I appreciate that you aren't actually splitting the guidance, but you know, the street is a bit worried that the bulk of the growth is only in organic. Any comments on that particular comment coming in or the worry coming in from the street?
In a quarter, the street and the analyst will get to see the growth that is coming from Pure Software because, that's a separate entity and we'll be reporting separately. And there is a very good, healthy, organic growth objective that we have taken for the current year. Just that we don't split it when we talk about because, some bit of business can happen because of the synergies that happen and how that gets attributed. And did not want to get in the split. And we have not done that in the past. If you look at it, last year we said 25%, didn't divide. In Q2, we didn't close an acquisition. We came back to the street and said, yes, we'll be doing 12% in terms of revenue. We're trying to stick to that. But as we progress during the year, the numbers will make themselves clear that we are not shying away, to reach that $1 billion target, we had to grow at about 25%. Now that is at 22%. The 22% is not all going to come from inorganic means. We will have to continuously invest and grow that organic muscle that we have so nicely put across the past few years.
All right, Joseph, now coming to you. A very good afternoon. This is Shrishti also joining in. My question is, what kind of a demand environment are you witnessing currently? Like, how has the client behavior changed?
Deal cycles out a little bit. And if you look at sectors, again, there's a little bit of difference between various sectors. Healthcare, we still see as being and it's reflected in our vertical number movements as well. Healthcare seems to be quite fine. Industrial manufacturing is still holding its own. High tech is being cautious. In edtech, you'll see K-12 being a little bit more open to investments, whereas higher ed is going through a tough time. So it's a little and retail CPG, I think the CPG part is investing, whereas retail is being a little careful. So that's from a vertical perspective. On GenAI, what we are seeing is that customers across the board are really excited, and we're having multiple conversations. We have 14 customers where we've done implementation of a few use cases, starting with POCs. And I think as we get into the second half of this year, our expectation is that we will start seeing more and more of the implementations taking place where the ticket size of projects will be larger. So I think in a nutshell, it's about making sure that we focus on the areas that are more important to customers and will have a larger impact. And those will be around analytics, automation, GenAI, security, and things like that.
Right, Joseph, if you could talk to us about the client matrix, especially the new logos, the client mining. Also, if you could talk about the overall pipeline.
Okay, so looking at new logos for the pipeline, there was I think end of Q2 pipeline was really good. Q3 moderate a little bit, and we are back above Q2 levels now. So the pipeline is looking quite strong. I would say the focus would be more on conversion and getting things started off now. In terms of new logos, again, it was a strong quarter. We had 10 new logos that we were able to add during the quarter, continuing, the trend of having between 8 to 12 new logos right through the year. And I think given the customer base that we have, I'm quite happy with the number of new logos that we've signed. And, we will have to look at how to grow these. On the customer expansion, I think it's a very good point, and that's something that we've made a focal point of our strategy because we have $61 billion customers, and each one of these should be a pretty, have pretty good budget and IT spend. And in the current year, there's going to be a huge focus on seeing how we can cross-sell across our three business units, IMSS, digital, and generative AI, to increase the wallet share in our customers and to do more cross-selling. And I think the verticalization strategy that we've adopted and implemented, having industry groups that will take ownership for these accounts, is what will really, we feel, help us to bring this to fruition by bringing the COEs, the three business units, all of them together, and making sure that we have solid account expansion plans, and also bring the various players together to implement these plans.
All right. Also, Mr. Venkat, the levers for the margins and what's the outlook on the headcount addition going ahead? If you could give us some sense over there.
We added about 251 people in terms of happiest minds year over year, crossed that barrier of 5,000. So that's a milestone for us. Looking into the year, we want to take that number between 6,500 to 7,000, which is net headcount increase of close to 2,000 people next year, out of which we have an acquisition, the rest coming in from organic growth. So like I said, not shying away from organic or hiring for it. But the focus or the lever that we have in place is utilization. We are at about 75, 76 for the last year, and we have nicely perked up on that front as we exited the year. We had hired about 400 plus campus joiners and laterals. They were slowly coming into the workforce, billable workforce. That's also happening. So that utilization uptake between 76 to 79 is an obvious lever. The growth numbers that we are looking is at the second lever. The third one, the acquired entities, bringing in the synergies that we talk about. There's a lot of talk about why it is synergistic before the acquisition. We need to execute on that in a very planned and calibrated manner to make sure that that also adds to the bottom line and the top line. So quite a few levers. The new one that I would add into this mix is the acquisition. And obviously, it cuts both ways. You can't go about shaking something the moment we start. We have said we've acquired, and Pure Software is a reasonably sized acquisition, so we have to take it in a very calibrated, planned approach to make sure that 1 plus 1 is surely 2.5 or more.
All right, then we leave it there. Thank you so much, gentlemen, for joining us on the show actually and talking about the earnings gone by for happiest minds, as well as if you can see the stock price right now, it is perched at around 831 or so, with an uptick of about 3%, and that most of the move has come over the last 15 minutes. The company is estimating a 35 to 40% growth in FY25, and margins they are estimating to be in the range of 20 to 24%, and the street seems to be liking that. But on that note, we slip into a break on this edition of Market Fatafat. Stay tuned. More on the other side. Don't go anywhere.
Welcome back to Market Fatafat, a show where we highlight all the buzzing counters in front of you. In the next 1 hour, we're going to be doing that. And for this, we have a team of researchers as well as our technical expert, that is Mr. Osho Krishan, with us. And Osho, I'm coming to you to have the take on Colgate, Palmolive. The whole FMCG basket rather is buzzing today. But how are you spotting Colgate, Palmolive on the technical front, since we are seeing that the stock has been holding strong in the recent past as well?
Very good afternoon, everyone. Well, as you have mentioned that overall whole FMCG space is looking very lucrative in today's session especially, and Colpal on the technical front has always been in the cycle of higher highs, higher lows, and has been one of the outliners from the FMCG counters. So from here onwards also, with looking at the overall sentiments and overall technical structure, I am expecting that Colpal has the tendency to reach the zone of 2950 to 3000 on immediate basis, looking at the overall technical setup. And even on the downside, we are having a very strong support around 2800 to 2820 odd levels. So any dip towards the zone of 2820 should be auguring very well for the buyers in coal path, and one should definitely eye for the targets of 3000 in the short term period.
All right, that's the day coming in on Colgate. 3,000 is the likely target coming in on this one. But let's move on. Let's shift focus to a pharma major, that is Dr. Reddy's, set to report its numbers. And post markets today itself, we're going to be seeing the numbers coming in from Dr. Reddy's. And this time around, we are not expecting a great set, because sequentially we are expecting a decline of 7% on the profit figure of the company. 1,290 crores is the expectation over there, while on the revenue, EBITDA as well as margin figure, just a muted set of performances what we are expecting. And the reason for that is basically the lack of the launches and the incremental competition in the base business of Dr. Reddy, especially in the US markets, while for the Indian markets we are expecting a growth of 10% on a YOY basis. But do remember that the company did witness a double-digit decline in their cardiac therapy, so that could actually keep the financials of the company and their India growth specifically in check. But apart from that, we'll be watching out for their key approvals in North America, GLP-1 opportunity, as well as some of the updates and the filings in the China market. So all eyes on Dr. Reddy's, but just ahead of the earnings, the stock is down about 1% as of now.
All right, that's Dr. Reddy's ahead of earnings. Let's talk about Bamalori, and that particular counter is in focus in today's trading session. A sharp up move is what the counter is actually logging in on an intraday basis. That they will be meeting, or rather the board of directors will be meeting on May 28th to consider earnings. And apart from that, what they've informed the exchanges, and I read it quote unquote, that review of the compliance of guidelines on the capital restructuring of central public sector enterprises, the CPSCs, by Finance Ministry, DPUM, in course of which there will be analysis and deliberation regarding a buyback of shares, issuance of bonus share, and splitting of shares of the company may also take place. So this is one of the reasons why the stock was pretty perked up in trade today, right now holding on to gains of about 3.8% or so in an otherwise weak market.
Well, yes, Bamalori is up around 4%, but moving on then, and Snehi, let's talk about Alsac Technologies. Tell us how are the earnings of the company?
Well, Shrishti, very good set of numbers coming in from the company, and the stock prices are reflecting the good set that they have reported. This time the stock is up almost 17.5%. In fact, it's right there where we speak. The company delivered its best ever annual results for the year. The revenue has come in at 130 crores versus 108 crores, which is up 20% on a year-on-year basis. EBITDA has also grown by 43% on an annualized basis. Net profit has come in at 20.7 crore versus just 12 crore this time last year, which is a solid uptick of 71% coming in on a year-on-year basis. The board has also recommended a final dividend of 15 rupees per share. So on the back of these stellar numbers coming in, the stock is doing pretty well, up 17.5% as we speak.
All right, so that is Alsac Technologies for you. But Ankita, let's talk about Lupin, and that one is sulking under pressure on back, sulking in trade rather, on back of its earnings.
Absolutely, Cheryl. This one's down and out in trade. In fact, right now trading with cuts of almost 6% in trade today. In fact, since morning it saw sharp slump coming in of 5%, and after that, of course, we're seeing a cuts of more than almost 6% now. And this is on the back of the lower than expected rise in the Q4 FY24 net profits, which was dragged by a spike in the raw material costs. Let's look at the scorecard then. Overall it has been a miss. The revenue has been below expectations. The PAT has been below expectations. EBITDA and margins, however, were largely in line. The revenue came in at 4,961 crores versus 4,430 crores on a year-on-year basis. The PAT saw an uptick of 52% on a year-on-year basis. The EBITDA came in at 997 crores versus 604 crores in the previous year, and also the margins came in at 20% versus 13.6% on a year-on-year basis. The company has also declared a dividend of 8 rupees per share. And if you look at what management said, they feel they're confident on growing the business in double digits. The US and the Indian markets are likely to do well. They aim to sustain the 20% EBITDA margin in FY25, and the EBITDA margins ahead are likely to be somewhere around 22 to 23% in the next 2 to 3 years. And Kotak Securities is maintaining a sell on the counter for 1,375 rupees per share. So that's the word coming in for Lupin.
Well, that's about the earnings of Lupin. But earlier today, we had the management of Lupin as well. Vinita Gupta, Nilesh Jain, as well as Ramesh were joining in. But let's hear out from Vinita Gupta, who is the CEO of Lupin, where she talks about the margin guidance for FY25 for the company going ahead.
So we have shared that in the next 2 to 3 years, we would expect the EBITDA margins to get to the 22-23% level. In the near term, we are continuing to invest on the R&D front in our complex generic platforms, in particular driving the inhalation pipeline further into the products that we have targeted, plus injectables, accelerating our injectables portfolio. So we expect our investment in R&D to go up as well in fiscal year 25, and still sustain the 20% plus EBITDA margins for the year. As we look at rolling out our pipeline and continuing to grow our business in India, US, plus other regions, we would expect to get to that 22-23% level in the next 2 to 3 years.
All right, so that's the management of Lupin as well. But also, let's talk about Jubilant FoodWorks and what's exactly happening in this particular counter. What a sharp up move.
Yes, from the last 3 trading sessions, there has been a strong traction in Jubilant Food. So I am expecting that from here onwards, there can be a strong upsurge that can be seen towards the 200-day SMA, which is placed around the zone of 505. So I'm expecting a target of nearly 20 to 25 points from here onwards. And on the downside, we are having a very strong support zone near 460 to 465. So for short-term traders, yes, one can definitely try to gauge the momentum in Jubilant Food. But once it sustains above the zone of 500, then we can witness a strong reversal from the overall corrective phase in this counter. And on gradual basis, we can see a higher targets of nearly 540 to 550 from medium to short-term perspective.
All right, that's about Jubilant FoodWorks, but let's talk about another company that is in focus, and that is Industars, because the company is in focus on the back of a brokerage note today by Macquarie, where they have downgraded the stock to an underperform rating from a neutral rating earlier, and have also hiked the target price to 265 rupees from 230 rupees earlier, but 265 rupees target is lower than the current market price as well. What they are highlighting is that the company has better visibility, but everything is priced in now. With Vodafone Idea's improved near-term visibility, they did lift their target price, but they've also cut FY25 and 26 EPS estimates by 8.5% and 4.8% on the lower rentals, more than offsetting the impact of higher tenancies. So that's the update coming in on Industars. The stock is down about 3.5% on the back of Macquarie's downgrade.
All right, moving on, Osho, let's talk about Piramal Pharma and how is this one looking on the charts to you? Do you see scope of some revival?
Overall, the Piramal Pharma have seen a very strong traction in the last trading week. It has seen a very strong V-shaped recovery on the daily time frame. So I'm expecting there has been a breakout around the zone of 145. So I'm expecting that from here onwards, one can eye for a very strong targets of nearly 180 in the short-term period. So even if there has been a bit correction of approximately 3.5-4%, so that should be seen as a healthy correction after the rally that it has taken from the zone of 140. So on the short term, 145 should be seen as the support, and on the higher end, 160 followed by 180 should be seen as the target for short-term traders.
All right, let's talk about Route Mobile then, and that particular counter is in focus in today's trading session because it's fallen to an 11-month low on back of its quarterly profits. If you look at the company, the stock has fallen by about 4.6% to the lowest level in about 11 months, and the company has said that they've reported about 13.3% decline in their consolidated profit in the quarter gone by, and if you look at the stock, it's reeling under pressure on back of weak set of numbers, Srishti.
All right, that's the update coming in on Route Mobile. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll come right back.